Okay, so let's just state it as it is. Gold is not a currency. Sorry, okay? You cannot use it for the purchase of goods and services pretty much anywhere. And most importantly, you cannot use gold for the payment of taxes. That's probably the most important definition of money, at least in the modern context. What does a national government accept to satisfy a tax liability? In the United States here, there's only one thing that the U.S. government, the IRS, will accept, and that is U.S. dollars. If you have gold bars and you go to pay your tax bill, they're going to tell you, go sell the gold and bring us back the dollars. And that applies to in Japan, in yen, it applies in the Eurozone, it applies everywhere where there's a national currency. In most cases anyway, I would say they do not accept gold. So let's just drop this whole gold is money thing, okay? How about gold as an inflation hedge? Well, guess what? Historically, gold has been a lousy inflation hedge. If you bought gold in 1980 on the outlook of ever rising inflation, you still have not made your money back after 30 years. It's a terrible hedge. If you want a good hedge against inflation, buy common stocks. Historically, common stocks have far outperformed inflation, and that's just on a nominal basis. When you factor in the dividends paid, you're way above the inflation rate. Gold is a terrible inflation hedge, so forget about using gold as an inflation hedge. It just does not work. So what about gold fundamentals, supply and demand? Well, think about it. Every ounce of gold that was ever mined since the beginning of time is still out there. It's not like gasoline or oil, you burn it up, it's gone. All of that gold is out there, and at some price level, at some price threshold, that mobilizes gold onto the market. People start selling their jewelry. I mean, you barely can go outside without bumping into some guy with a big sign saying, "We buy gold." That's been happening. We're starting to see, for example, Japan, a net exporter of gold. Japan's not a gold producing nation, but people own a lot of gold jewelry there, and they're starting to sell it, and those sales of gold equate to exports from Japan into the global gold market. So we're definitely at a price where we're starting to see more gold sales, and that's the reason for gold coming down. Now, probably one of the biggest fallacies out there is that central banks are printing all this money and it's hyperinflationary. We saw this all last year with quantitative easing and QE2. People jumped all over that trade saying, oh, QE2 is going to be hyperinflationary. Well, guess what? It wasn't, okay? And people who think that it's inflationary just don't understand monetary operations of central banks. When they lower interest rates or when they perform quantitative easing, yes, they're adding reserves into the banking system, but at the same time, they're taking away assets from the public. Those assets are bonds or other government securities, which pay, in most cases, far higher interest. So what you're seeing is that all of that interest income is being stripped away from the public. You're getting a major reduction in interest income, which, by the way, is not an insignificant part of personal income. Last year alone, the Fed took away $80 billion in interest income from the public. There's no way in the world, when you take away that kind of income from people, that it's going to end up being inflationary. And that's why after that initial impulse, that run up, when everybody jumped in saying, hey, that's going to be hyperinflationary, it fell right back down again. So some people out there in the gold bug community are starting to figure this out. I would say a very small, minor percentage of people really on the fringe, the more intelligent ones, the more reflective ones, they're starting to look at all these beliefs, money printing by central banks, hyperinflation, and they're starting to see that the markets just aren't reacting that way, and gold is not reacting that way. And they're starting to realize this, and they're starting to sell. But there's still a vast sea of people who still believe that there's going to be hyperinflation, when really the biggest risk is deflation, because we're seeing austerity in Europe. We're seeing austerity come here to the United States right now. So I predict that in 2012, this coming year, we're going to have a huge sell-off in the price of gold, because many people who are still in gold, who bought gold on this belief that it's another currency, it's another form of money, that there's going to be hyperinflation, that entire thesis is going to unravel, and so will the gold price. In conclusion, if you like to lose money, stay in gold, which is a very poor investment. If you're worried about the future, go into treasuries or stay in treasuries, because they're going to stay very strong as deflation remains the main economic fundamental out there. It's going to grow in its effect. And if you want an inflation hedge, the best inflation hedge historically is common stocks. That's it for now. See you next time. Bye.